Hey everyone, this is Dan with Data Trend. Today is Monday, April 11th, 2016. It's about 2:30 p.m. or so Mountain Time. The market's closed a half hour ago. So we had the S&P 500 closing the day here at 2041.99. It was off 5 points or 0.27% or so. And this pattern that we've been seeing here, sort of this choppy consolidation with a slight drift higher, continues. But today's action was a little bit more bearish. And it does seem like maybe the market has the potential to pull back a little bit lower, maybe even down towards this 2033 or even deeper down towards the 2015-ish area. At the same time, the amount of the pullback that we've seen from this move higher hasn't really been all that significant. So if we draw a Fibonacci level from the low in early February up to present in early April, we see that the 23.6% retracement kind of corresponds down to around that 2015 level, which is also the 200-day simple moving average. And I'm not a big believer in Fibonacci, and I'm not a big believer in a lot of these technical tools, but it is something to be aware of, and it is something probably that a lot of other participants are watching with this recent move, and the 200-day simple moving average also sitting at that level. And in the context of this move higher, the amount of a decline that we've had from this high is really not that significant yet, and it's really premature to get too excited about the bear case here. If we drop down to, I'm going to go ahead and remove this because I just don't really care for it. If we drop down to the 65-minute time frame, what we saw today is the market traded higher early in the day, and from there it found a lot of selling. And it quickly retraced that move back lower. These are the candles for today, these 6 candles on the 65-minute time frame. We do have the 5-day simple moving average crossing below the 10-day simple moving average. And I suppose you could make the case that maybe we've been coming up here and finding sellers on a faster basis than we have, and we're creating some sort of triangle structure here, and we keep hitting this level down around 2043. The thing that I care the most about, I guess, is that this 2043-ish levels from 2040 to 2043, we've tested it several times. We tested it back here on April 1st, close to testing it, I guess. Tested it here on the 5th of April, tested it here on the 6th of April. We broke through it here on the 7th of April, came back down, tested it again on the 8th of April, and then today we sold off into the close and ended up right down there kind of at 2041, which is just in that neighborhood of prior support. This level has been acting as support. And it does seem to me that if this level decides to break or the market fails to find buyers at this level, that certainly we have the potential to push a little bit lower, at least down to this 2033, and a deeper case pullback, maybe down towards 2020 or the 200-day simple moving average, which would be down here around that 2015 or so. Certainly we don't know what's going to happen, but it does seem like the market keeps testing this level, and generally when it knocks on the door this many times, eventually it's going to walk through it. That's not to say that it will happen, but it certainly seems possible or probable that a little bit of a pullback here would be not super surprising. If we hop over and take a look at the position as of the close today, so we have the market here at 2041.99. And this trade began as a CIB, and it was converted to broken wing butterfly as we got closer to expiration. Right now we're sitting with 18 days to go, so we're getting really close to expiration, and we are looking for an opportunity to get out of this trade. So with the market here at 2041.99, the delta on the trade is negative 1.06. The gamma is negative 0.14. There's about $23 a day in theta. The vega is negative 54. And the open profit, including the adjustments up till now, is about $182 or so. The market is sitting right here, and the day step slices are set to a 3% move lower and a 1% move higher. So if the market was to gap higher in the morning, say 1% or so, we'd be up around 2062, and the trade would still show an open profit of about $137. If we were to have a big gap lower in the morning, about 3% gap lower, we'd be having a bad day, and the trade would probably be showing a small open loss, or an open loss of about $100-something. And at that point, we'd just be closing out the trade and walking away from it. Since we're sitting right here kind of around the support level, one of the things I'm going to be watching is if we do get a break lower, to see where the market goes. So we talked about, and let's just hop back over here and talk about this for a second. So if we talk about potential levels of support on the downside, we could say, okay, maybe the market comes to here at 2033, and maybe it pulls back a little bit deeper towards 2022. And then again, we have that 200-day simple moving average around 2015. Okay, so if we jump back over and look at the position, The lowest level there is 2015, is basically our short strike. So if the market was to pull back to there and find support, we would be saying, okay, maybe it's not that great of an idea to continue to sit in this trade just because we're close to expiration, we have some open profit. It might make sense to either adjust it with a reverse Harvey or just walk away from the trade. If the market pulls back a little bit, say into that 2030 level, that that 2033 was that shorter term support, or even down to the bottom of that box around the 2020-ish area, we're still in relatively good shape, and it's actually okay for the position. At that point in the trade, we're going to start to get a tiny bit long delta, but the curve is still pretty flat. The T+0 line is still pretty flat, so we're in an okay position. My hope here is if we day step this forward to Friday, this is kind of what the trade looks like on Friday, so we have a little bit more room to run on the downside if we were to pull to that 2015 and test a little bit lower to 2000 or something, say. But my hope is that sometime by this Friday we'll be able to get out of this position and take it off before going into the weekend. The other trade that we have open is the June 1 trade, and we'll hop over and take a look at that as well. So let's see here. So this is the SPX June 1 trade, and it's made up of two butterflies. This trade has a little bit longer to go. It has right now 53 days to expiration. And we have two butterflies, one centered around 1995, the other is around 2010 or so, and they're both broken wing butterflies. This trade with the market here at 2041.99, the delta is negative 2.2, the gamma is negative 0.05, about $11 a day in theta. The vega is negative 65, and there's an open profit of about $50 or so. $15 came into that today. And this trade is relatively early in the game still, and there's just not a whole bunch to say. If we got to test down to that 2015 level, the 200-day, that's right here. The position is fine. A little bit deeper towards 2000 is still fine. So there's really not much to do here other than just kind of sit and wait. So at any rate, that's all I have for tonight. We'll have to see how things play out in the morning. I'm not sure. Futures have been kind of selling off here late in the day, but the market did technically still find support at this 2043-ish level, so it could just be a shakeout, and if it does get up here, get up and above this 2063 to 2066 area, something like that, it does have the potential to push up here to the top of the box and even higher. So for the time being, it looks kind of sideways, but we'll wait and see how it plays out. At any rate, thanks for watching. If you have any questions, feel free to shoot me an email, info@thetatrend.com.